We're into the last session. I know we're all kind of tired, but it's an important topic. What I would love to do is we've got a great panel, and I'm going to ask them to introduce themselves. But I would also really enjoy hearing from the people in the audience, especially if you have some controversial views, so we can make this a rich panel rather than just a dry panel to end the entire day and the two-day conference. So my name is Farzam Essani. I'm going to ask Henri to introduce himself, and then we'll go across, and then we'll just kick this off.
I think you just saw my presentation. Henri Arslanian, very, very excited to be here.
Hi, Shergeran Naidoo from BankservAfrica. You saw my CEO speak a little while ago.
Hi, good afternoon, everybody. Sorry about that. Good afternoon, everybody. My name is Dawid Villiers. I'm a partner in Wentzel's financial regulatory practice group.
I'm back. I thought So I guess I'm going to have to answer some questions.
All right, so I think the first thing, yes, can you hear us? Okay. Okay, perfect. Thank you. So the first question to ask, and it's not a silly question, is do we need regulation in this space? If so, yes. If not, why not? I'd imagine most of you would say yes. So anybody in the audience that says no, please think about it. We'll get the mic to you so that you can give us your views. But the panel's open. Henri, we've heard from Nerushka. Let's start from this side.
I think with this, we only need a moderator. It's like, it's no, I'm kidding. No, it's a obviously, I think I'm a big believer, and as you guys heard, this industry will get regulated. There's no doubt about it. It's a new asset class. The one thing with regulations is very interesting. So again, for full disclosure, I sit on Hong Kong's regulator advisory board, but I deal with numerous regulators around the world. Regulators are way more knowledgeable on this topic than you probably would think of. I can tell you I've been in very in-depth conversations on crypto and brother crypto exchange and the risk going on with regulators. Actually, I was even surprised. I would say the average regulator is often more knowledgeable than the average banker that I deal with, which is quite interesting. But the only thing I would say with regulation is we're seeing a number of countries now who want to get regulated. They're creating platforms. You just mentioned Gibraltar, for example, which is a great example with GBX. But I think what's really interesting is if you're a jurisdiction and you don't want these ICOs, you don't want these crypto exchanges, the uncertainty will keep them away. Actually, what the community wants, they want clarity. Actually, if you come up with regulations, that's what's going to attract the community. And actually, crypto players, often I find when countries stay away, stay silent, is because they just don't want anybody to deal with this in their jurisdiction.
Well, I think between Henri and Nerushka, you guys have sorted all the problems out. But contrary to what everyone might think, those of us that are pushing for some sort of regulatory involvement are not Luddites who are afraid of technology. I think we really do recognize that there's a need for regulation. Just looking at the timing of this panel and these discussions, regulation is following innovation. So for the past 2 days, we've been talking about all the hype and all of the real the enthusiasm and the stuff that can actually happen with Bitcoin and blockchain and cryptocurrency. But there needs to be the actual rails. There has to be the support, the guidance, the governance. So yes, I think that regulators have a role to play. And I think if you look at just the roads, people traveling on the roads, the speed limits themselves are a form of some sort of regulation as well. You need some sort of knowledge as to how fast you can go, where you can get off, where you can do your forks and whatever else, using all of your blockchain terminology. I'm from BankservAfrica. You guys, Chris explained what we do. We are very regulated, but there is definitely a role for organizations such as ours, and we operate in terms of what's the requirements from a policy perspective. So I feel that absolutely has to be some sort of regulatory involvement.
So Dawid, I would imagine everybody thinks that there is some type of regulation. We'll come to those that may not think that there should be. But let's add another spin to the question. Many people have been talking about self-regulatory organizations themselves. So tell us a little bit about what that means. How do you actually self-regulate? And how does that actually play a role in this space? Is it a good idea or not?
I think, Fazam, the idea behind self-regulation in this particular environment, blockchain environment, stems very much from the principle that it is a decentralized system, and therefore the idea of dropping into the system a central authority is, by its very nature, something that I think causes a lot of discomfort and I guess tension, because it is so alien to what's really happening in this space. But when you talk about a self-regulatory model, the first thing I would say is that, at least in the South African context, that is not something that is completely new. Mm-hmm. The Johannesburg Stock Exchange is an example of an organization that is in many ways self-regulated. If you think about the JSE, it's regulated by a statute, so there's a higher authority, of course. But the JSE is very much in charge of regulating its own market, and it's therefore an example of self-regulation. But I think when we look at the blockchain environment, what would a self-regulatory model look like? I think it comes down to a lot of things which was previously mentioned by Henri. We'll look at things like protecting the integrity of the system and who plays in that system, making sure that people who participate in this economy are the types of people that should be participating in it, and very much to try and prevent those bad apples that Henri spoke about from forming part of the system. And it's very much, I think, could be a very democratic system in a way where all the players in the market play a role in setting the standards. So conceptually, that's what I would say a self-regulatory model could look like in a blockchain environment.
Just to add to that, I think, yes, I think regulators need to expand their mandate in a sense and move away from just kind of pushing whatever the black letter law says and says, enforcing these laws, and that's our job as a regulator. It needs to extend to becoming more education and awareness. Being a place where kind of if somebody needs information, what's a scam, what's not a scam, kind of having this one trusted source to say, okay, help me, I need information on these issues. And similarly, I think self-regulatory bodies also need to take some kind of education awareness mandate as part of what they're doing.
So, if I can just add to about the self-regulatory. In the payment space as well, in the payment clearing houses, that's how payments actually operate as well in South Africa under POSIS. So self-regulation is not something that's new to South Africa. Okay, question for the audience. No, first my question to you, and then I'll ask you a question. Before we come to you, Rosella, is there anybody in the audience that believes that let's talk about cryptocurrencies themselves, that there should not be any regulation? And if there is, please raise your hand. Do you want to say a little bit, or both of you, do you want to say a little bit of why you think that? If we can get a microphone over there, please. And in the meantime, let's ask Rosella what his question is. Rosella, come.
No, that's fine.
Let's hug and you can ask your question.
I will say a little, I'll try to speak freely.
Go for it.
All right. How can you guys see? Number one, I'm in favor of regulation. I think it should be a regulation, especially to someone to not run with the cryptocurrencies for the clients and the users and everything. But how do you see privacy without these regulations in place? Like, for example, if I have to set up, if I have to create an account in any exchange in the world today, they'll ask where my mom came from, my DNA, my blood, and everything else. So the exchange today, they are worse than banks, because they are so afraid of the regulators to do something and then put them in jail or something like that. But and then what happened with the privacy for the user? I don't want to give my ID to an exchange that tomorrow they're going to sell my information to someone else. Or I'll have some new company that ABSA just bought, and it's an insurance company, they're going to call me to offer me insurance. But I never gave the rights to ABSA to sell my information in the market. So how do you protect the privacy with a bunch of regulation that most of them is bullshit, but some of them actually will work?
Okay, thank you. Yeah, we'll get so while we're getting the mic over there, any responses to that?
I think I'd like to venture an initial response, and you're not going to like the answer I'm going to give you, because the answer is you protect privacy by other regulation. So there are, in South Africa at least, and you've spoken about the POPI Act, it's not yet enforced, but there are other standards that protect personal information. And yes, you've said that South Africa has missed out on new generation legislation aimed at protecting privacy. But I think if you're looking at regulating this space, you also need to realize that regulation might have unintended consequences. And perhaps one way of addressing that concern would be to make sure that if you regulate the space, you also look at other areas of regulation that impact on this space and ensure that you protect personal information at that level.
To that point also, one thing that you said about the conduct and being able to sell your information out there to whomever wants it. You've got your Consumer Protection Act, You've got Twin Peaks, which has got market conduct authority as well. So there's ways in which you can actually have regulation to enforce the manner in which they engage.
Henry? I completely disagree with you. No, don't take it personally, but you're comfortable that it'll be an exchange, that there's zero KYC, that a criminal can come and launder money with an exchange?
Someone to buy cryptocurrency wants to have an account in the bank.
Okay.
So I have an account on ABSA, and this person also has an account on ABSA. So if ABSA does not know where the money for this person is coming from, it's because ABSA is not doing their job. So in the first place, I understand someone walk in my office with a bunch of money, I will not accept at all, because someone that understands money needs to check that information. So for you to buy cryptocurrency, must to come from a bank account. I know some banks, they don't do the right thing, such as HSBC, RBS, and everybody knows. But the money must be bank to bank, must be inside the bank. But I'm a little bit mad when I have ABSA coming to me and ask where the money from my client is coming from, which the transaction happened inside their bank.
Yeah. So basically, you're outsourcing the KYC to the banks, right? No, I get it. And okay, I think there's two things. First of all, I think there needs to be KYC and AML for all the reasons we discussed. The reality, though, our current existing AML, anti-money laundering mechanisms do not work. Very good example today, the World Bank, the UN estimates is between 1 to 2% of laundered transactions are captured. It means 98% plus is just basically being laundered in the market. That means everything that we're doing right now is not working. All this thing that you're saying with your banks that you named, that you're doing the process, in practice is not working. What I'm confident in the AML and the RegTech space is actually what you're mentioning before. You know, I spend a lot of my time on regulatory technology. I can tell you in the AML space, which is the area I just mentioned, we literally went from the bicycle to the Porsche 911 in the space of 24 months. Right now, especially in many countries, a great example of this is Asia. If you're doing it in the US or in Europe, people have identification, they have passport, the names are reasonably clear. Try to do the AML on Mr. John Chen. Good luck. And I can tell you, false positive is a very big problem. Now, whenever your banks that you're dealing with, they're doing this process, we are generally improving in this space. There's a lot of new big data, there's a lot of AI solutions are coming up where we're able to reduce the AML efficiency from really what it takes right now to make it more efficient. So I'm actually quite optimistic. I think fundamentally, I still disagree. I really believe for the crypto ecosystem to flourish, we need some kind of regulatory framework. And most importantly, is KYC. If there's tomorrow in the news, there's an announcement that Kim Jong-il is laundering all their money via crypto exchanges, good luck getting this industry and actually in the mainstream. It's going to never happen.
Thank you. So we've got a couple of comments about why regulation may not be needed. Let's hear your views.
I'm not saying not needed, but it's all about timing. I still think we need to learn much more. And the reality is that it's still the internet. So we already have a lot of regulation that tells us how to operate in a digital world that has to be reused. So it's not that we're operating in a non-regulated environment. Those that choose to operate in that environment, I feel sorry for them because it won't last. So it's better to go into this new environment, reutilizing the regulations we already have, and not to try to over-regulate it, because the whole idea is to let the innovation flourish.
So Monica, you as the ex-CEO of a self-regulatory organization, is the timing right now for more or for regulations in this space? Do our current regulations actually apply? Because they actually don't, because we're talking about assets that live on global ledgers that are not particular to any jurisdiction. So is the time right now to have voices from the regulators, or should we still let this kind of play out a bit more before we hear more from regulators?
I believe that the regulators needed a lot of education, because it's like the blind leading the blind. So when we built Straight and we moved physical to digital, it was very much self-regulating. So yes, there were certain legislations that had to be amended because the law was talking about share certificates versus digital. So that was a no-brainer. You had to change the law. But the most of the regulation came in self-regulating organizations. We wrote the rules, and we did it as we were operating. It was only through market practice that we started saying, now we need one for this. Do you see what I'm saying? I'm just worried about putting too many shackles in advance without having practice enough as to what this new world order means.
Perfect, thank you. Let's get the mic to the gentleman over there, please. And then while we're getting the mic to him, one of the questions I'm going to be asking the panel for you guys to start thinking about is, if you were the regulator in South Africa today, in a couple of sentences, what would be the principles around that regulation? What would be your advice to the regulators? There are several in the room today. It would be great to hear your thoughts. But let's go to that comment over there, please.
Thank you. So I'm also in favor of regulation of crypto, but I am currently seeing that it's kind of hindering a lot of the innovation. So what do you guys see as things that could stifle the growth and the innovation involved with cryptocurrencies through regulation? And how do you guys think or how do you think as a country we can mitigate that so that the technology is still growing and is still being adopted, but it's not being pressed down and being over-regulated and shackled down so that people actually don't want to even use it?
Okay, thank you. So my initial question, is there anybody in the room that thinks we should not have regulation? Is there not a single soul in the room? Okay, there are a couple. I'd like to...
We should not have regulation, at least in the current form. You know, they have to innovate, they have to come to that level field. At this point, the current, they're going to be as rigid as they are. Sorry for that, but it won't apply, and it will be just a hindrance as the...
Okay, let's have one more comment from Twarai, and then we'll come back to the panel right now, just right next to you.
Thanks. My comment / question is anchored on the conversation that was happening yesterday, where people were saying everybody is jumping onto the blockchain wave, but the key fundamentals of blockchain are where you're trying to deal with trust issues. And another key fundamental is peer-to-peer movement of value. That's typical of blockchain. So what's there to regulate? This keeps coming into my head. So if we've removed third parties in the equation, and we're talking fundamental blockchain, and I see a lot of presentations that have been coming from a lot of presenters, but these are people who are from another industry, and they're trying to say, where do we fit in the blockchain thing?
Can I build on that, actually?
Sorry?
Can I build on that? Can I just build more?
Let it finish, and then we'll come to you. Go ahead.
Okay. So question is, if we're talking typical blockchain, where we have removed all these intermediaries, what's there to regulate? Because how do you regulate me if that's the case? So if we're moving value from one person to another, and we've removed the function of a central bank, and this central bank is supposed to be the regulator, what are they going to regulate? Unless they're going to just hammer down on exchanges, third-party functions within the blockchain ecosystem. What is it that they're going to regulate? That's number one. The second question, the second part of my comment goes to the PwC gentleman. The auditors know that each time you audit and look for stuff, you look for materiality, right? And the materiality of the crypto space at this point in time is so small compared to the bigger scheme of things. And I always have to deal with this when I am faced with the Bitcoin question. Right, and people will say Bitcoin is used for criminal activity, and I've even heard this from very senior people in global economics, like Warren Buffett. Diamond will say somebody is going to be killed. But people were getting killed before there was crypto. And a lot of, in fact...
Where's the proof?
And a lot of stuff, a lot of bad stuff, from terrorism to whatever was happening before there was crypto. Yeah. And the materiality of crypto at this point is so tiny in the bigger scheme of things. When I was reading an article the other time, and I saw that a drug dealer is a billionaire. The El Chapo Guzman is a billionaire. And this guy was a billionaire before there was crypto. He's still a billionaire now with crypto, and I don't even think he uses crypto. Maybe he's got vaults at home of US dollar cash.
So I'm gonna pause you there because there are a lot of hands up in the air.
Maybe he's the fella broken tooth that I talked about.
just before we get to that thing, just to synthesize what you've said. So I think it's a good point. So right now, when you say that we've disrupted central banks, we haven't disrupted central banks. Central banks control the money of most of the world's money. But I think one question to ask, coming from where you're coming from, is once people have transcended or gone from fiat to crypto, And then you're talking about crypto to crypto. Is there a requirement for KYC and all that from crypto to crypto? So that's a question for us to think about and for the regulators to think about. Let's have a comment there, and then I want to come back to our panel, and then we'll open it up for questions.
Yeah, so I just want to build on the technology itself. So Shergeran said something about BankServ and regulated, which is quite true. But the thing is, if I want to see how BankServ works in the technology aspect as a developer, no one has access to that code. So we've got to trust the regulator who goes to that code and tells the public or the Reserve Bank that the system works as expected. Whereas with Bitcoin and Ethereum, how it works is totally open. And it has, I think Consensus released a number the other day that there are 100,000 developers who work on the Ethereum platform, where if there's a bad actor on that platform, he's going to quickly get thrown out, and that code doesn't go into that code base. It will never get to the main network. So to touch on like that thought process is where it's okay to come these government bodies like regulators or similar one, they have to be regulated because the public doesn't see how the technology works. And they don't understand how the technology works, so there's got to be a body there to make sure that they're doing the best interests of the greater public. That's happening in the crypto space now because it's open source and anyone can have a look at it. So just a discussion around that. Then a lot of talking through, like everyone here, is putting the blockchain technology regulation and cryptocurrency regulation into the same bucket. So in the previous presentation, we spoke about all these technologies that FinTech need to be regulated, and be it machine learning, AI, driverless cars. But then we went into articles about ICOs and cryptocurrency scams, and where there's a big difference between the two. I potentially believe that the tokens form part of the network, but a lot of the regulations coming on top of the blockchain technology itself, protecting investors, but not the technology. And like we're all talking about it as one thing.
Thank you. So we've got a few hands up here. It's great to see the engagement of the audience. If we can get some mics, please raise your hand until you get a mic. But while we get you guys mics, you've heard a few of the questions, ladies and gents. If you were the regulator right now in South Africa, I know you're new to this, let's say Hong Kong for you, that's fine. What would be the principles and advice that you would have for the regulators right now? Nerushka.
I'm just going to add, I think, what was being said on this side about the kind of stifling of innovation through over-regulation. I think definitely we should not be over-regulating, because then I think somebody mentioned a number earlier to say if you want to launch an ICO properly and follow all the best practices, it's kind of $500,000. And now if we're saying the kind of entry point into the market is you have to start with that amount of money, then you're kind of cutting off a whole lot of entrants before you even get started. That's kind of a self-regulatory perception. So now if you add regulation to that, I think it's just maybe too much red tape from that perspective. So I like the ideas of having some kind of sandbox or exemptions or some kind of special scenario for things which are very new and we don't fully understand, to try and stimulate people and get them active in the space.
Dawid.
So I think your question is if I were the regulator, and perhaps in responding to your question, I might also touch on some of the issues that were raised there. The model, the principle I would follow in order to develop a regulatory framework for blockchain, and I think you're right, we shouldn't confuse different issues, but I would start by saying to myself, we need to follow a risk-based approach with regards to regulation as opposed to a rigid ticking the box type of a regulatory model.
What does that mean for the audience? What does a risk-based approach mean?
It means that you have to import some element of intuition into how you regulate what you need to comply with. Just one example is what we know in South Africa as FICA. It's a four-letter word for many reasons. A four-letter word you often utter when you get asked to comply with the Act. But up to now, the Act has very much been the banks have to follow, ticking a box. They need your proof of residence, they need your ID, all of those irritating things that we might not necessarily have readily available. But we're moving towards a new regime now, where it's really left to the banks and other accountable institutions to state themselves, well, what's the real risk that we're facing here? So it's actually, you're inclined to think that it's easier. It's actually far harder to have a risk-based approach. So that's one element of it, of what I would take into consideration if I were a regulator. And then to the other question, I think perhaps one other idea that I would give to regulators, and it's something that they've been saying themselves as well, is they don't want to regulate the technology. They don't want to tell people Well, I don't think they should tell people how to write code and all of those things. They should focus instead on where the technology touches existing regulated areas. And from my perspective, I'm a financial regulatory lawyer. So I look at it from a financial regulatory perspective. And that's also, Nerushka, I think, where you touched on ICOs. And where, for example, an ICO product, a token, behaves like a security in the sense that it offers up voting rights and dividend rights and so on, then I would argue it should be regulated as a security because it performs exactly the same function. But nobody is saying that the underlying code that has been developed to run this product should be subject to regulation. It's where it touches on existing financial products that I think the focus of the regulations should lie.
Thank you so much, Shergeran.
I would adopt the approach of looking at what's the policy considerations for the country. We look at the monetary policy, the fiscal policy, the policy. Now I'm talking from a payments perspective, whether the efficiency and effectiveness of the system, whether it would be enhanced by the introduction of the technology. To the points that both Nerushka and Dawid had made, I would not regulate the technology. I would actually look at what are the outcomes and what are we trying to achieve, and then I think the approach that the Reserve Bank has adopted with the establishment of the FinTech unit was a very prudent approach because it allowed them to work within. They've actually taken that out and hived it off to allow the team to be able to work within best practice, to engage with the industry, to form a more coordinated approach, and to also then hopefully that regulatory sandbox will be coming out soon, and then we'll be able to then introduce it into the market in gradual steps.
Perfect, thank you. Henri, we've had some diplomatic responses. Let's hear some.
Well, first of all, it's very difficult to be a regulator. Honestly, this is what I tell everybody: is if imagine tomorrow you're running the regulator of a country where you have the political arm, and by the way, crypto is one of your 25 different things you're looking at. Like for us, crypto is important. I can guarantee you, ask the head of any regulator, crypto cannot be a priority of other stuff. So that's first thing, right?
So is it a priority now or not?
No, for many countries, it's not. I mean, there's other issues. Again, we live in our bubble, right? Let's not forget that. There's other issues. I mean, protection of investor public. Think about the stock exchange rules. There's a lot of normal business that still goes on, by the way. It's not only all crypto that regulators have to focus on. I think it's really, really difficult to be a regulator. And honestly, if you really have to make a decision to be accountable, it's very difficult. I think regulators are actually educating themselves. Honestly, I just accepted to be at the IOSCO meeting next month in Budapest. There's 125 regulators there, and we have a whole half a day on crypto, right? I mean, I'm going to talk a lot of stuff I talked today, and these are 125 regulators from 125 different countries. And these are the senior people on it, right? So they're actually genuinely doing the right things to learn. However, there's also a lot of constraints. One of them is by law. Most regulators around the world, each country depends, the regulator is set by legislation, by the parliament or whatever entity is. They have a mandate. Most of them, for example, regulators your mandate is to regulate the securities world. But then, you're right, if it's a security, yes, but if not, they just don't have the mandate to do it. So by the time you go back to parliament and you change the law, good luck, right? Second thing is also then people, right? If you're an entrepreneur guy, you come, you do ICO, you run an exchange, you know you're in it. Generally at regulators, there's only downside. If the crypto ecosystem is doing great, you don't necessarily get promoted. If something goes wrong, then you have a problem. And this is why I think they need to be a bit more conservative just because of the nature of what they are. But it's very, very difficult. I'm in favor of principle-based regulation where ticking the box does not work. In many countries I've tried it doesn't work. There's actually real problems with it. Because like I mentioned in my presentation, some things you try to check the box. Crypto funds, independent third-party custodian. How are you going to do that with a crypto fund? Right? So that doesn't work. I believe in principle-based, but even then, the principle-based, you're giving discretion, which again is not ideal. So I think that we're going to hit the happy medium. I really believe for the short to medium term, we need to try a way to put the crypto world in the traditional legacy system because we have no choice. And that's the way we're going to be able to grow. And when we hit that the point where it's actually more we are more decentralized and so on, more blockchain based. I agree. There's a lot of benefits. On the point of blockchain, you're absolutely right. I actually think the issues on blockchain, on the regulatory perspective, are even way worse than what we discussed today on ICOs. I mean, one of them you mentioned, GDPR. GDPR is this the data protection rule from Europe. You have a right to be forgotten. You put something on the blockchain. How do you take your right to be forgotten? I haven't thought about this. All the banks, we're all doing POCs, we're doing projects. So there's very, very serious things in the law right now that we haven't thought about. And I really, you're absolutely right. I think anything's open source, I trust it way more. But on the blockchain regulatory issues, man, it's even worse. It's going to be a very exciting time. I told you I love regulations. And if you love regulations, it's going to be a very exciting decade to come.
Thank you so much. We've got a few questions of you. Who has the mic? Go for it.
Hi. This technology is fundamentally borderless. So to me, if you have the legislation here in South Africa and you have the legislation in another country, it doesn't really matter because my Bitcoin is captured by 12 unique words. And that 12 unique words is just as much in Switzerland as it is in South Africa today. And if I want to do something illegally with it, I can argue that my Bitcoin is in the jurisdiction that I want it to be. So without a global framework, I think all of this is useless, all of this geographically bound regulation. So I'd just like to know if you agree.
From my perspective, I think I do agree with you, and I think with this particular market, regulation needs to be part of a global collective effort. Absolutely, and again, for me, that's not something entirely new. Securities regulation has always been undertaken on not an entirely, but largely global from a global perspective. And if you think about just the G20 countries, for example, they tend to have similar securities laws, which all stem from the same type of standards. So that's an example of how that's already been done in financial regulation generally. But I'm inclined to agree with you entirely that if you think about regulating this market, you do need to look at it internationally. And I do believe that is indeed the approach, at least insofar as what I understand to be the South African Reserve Bank's approach is to collaborate and cooperate with other regulators. Perhaps you want to...
If I can do something from a payments perspective, if you're looking at it in a regional integration payments, there's actually a stream for the harmonization of regulations. So to your point, it cannot operate in isolation. You have to actually have some sort of regulatory universe in which there's alignment, but that's not going to be easy. It's really trying to herd cats as well because everybody's got their own requirements and their own needs from a policy perspective. So there's got to be some minimal form of alignment. And to your point, that hula hoop this morning would have actually been a perfect anecdote for it.
Wish I had it. Let's just take a couple more questions and I'm going to come back and ask the panel to finish off. We've got a few more minutes and then we're going to wrap up. We have someone with a mic over there.
Yeah, hi, just one point, right? So do we have lottery in South Africa? Do people buy lottery tickets? We do, right? So when I buy some coin in any ICO, I actually think of it as a lottery ticket. I mean, that's my way of looking at it. So why can't we apply, temporarily at least, that lottery ticket law or regulation? Because when I go to buy that lottery ticket, nobody asks me for my ID or passport. I mean, I just take the lottery ticket and, your thoughts, can we not apply that maybe temporarily on ICOs?
It's a big casino. Here we go.
Is it on? Yes, so Farzad, you asked us who is for regulation and who does not believe in regulation. I think for me the key question is how we regulate. That is what really needs to change. And in saying that, I'd like to know what your opinions are on introducing artificial intelligence in the process of creating regulations in order to keep up with the pace of emerging technologies, because we're trying to solve a problem that is technological, but we're not using technology to do that. So what are your thoughts on that?
Great question. We'll take another one. So we've got a lottery ticket, we've got artificial intelligence. Please go for it. Go for your question.
Hello. I would like to ask, how can we ask the regulatory to regulate something that has been created because of a financial crisis that has been, I mean, you know what I mean. So we are asking the regulatory to say, hey guys, you have to regulate cryptocurrencies trading, but don't talk about trusted third party. It's another kind of financial system, and you have to regulate it. They are very afraid of, I'm coming from Moroccan CSD. And when you talk to them about blockchain, and they're very afraid because people told to them that it will blockchain and cryptocurrencies will remove all the third parties. So they're like, they say no. I mean, but we have to convince them. I mean, that's the point.
Thank you very much. We'll have the last question. I'm sorry, I know there's lots, but I've been given a time limit. The last question, then we're going to have a last round of responses, and then we're going to bring it to the end. I think I'll encourage everybody afterwards to please come forward and let's continue the discussion.
It's more of a comment than a question. You know, we are looking at FinTech and regulation as two mutually exclusive things. But, you know, just to give you a background, so I'm a co-founder with Blockchain Works, who's been partner with GBX and, you know, has helped Gibraltar put up the Rockcoin. Okay, and we have been interacting with regulators like RBI and MS in Singapore and even FCA. Okay, and, you know, in all our discussions, we realize what you said, that the regulators are more intelligent than the bankers.
Oh, absolutely.
You know, and they have a problem. And, you know, we went with an open mind. And we actually changed from a FinTech company to a FinTech RegTech company. Okay, because that's a huge opportunity there. You know, you have regulators who are looking for solutions, okay, to regulate something which is cannot be regulated in the conventional way. You know, so in fact, you know, sometimes the problem is the solution. So we actually came up with a blockchain-based anti-money laundering solution, okay, for the regulators, which we are in talks with FCA to put it in the sandbox. You know, so I'm saying that these are not two mutually exclusive things.
Thank you so much. All right, time is up. Last few seconds, just last responses from each of you, please.
The three quick comments. So I think something to do with gambling or lottery here. Interesting. The UK actually, they're looking at gambling as a tax loophole for tax exemption. Something around. Yeah, I think
AI.
Internet, the borderless thing is not even a blockchain problem, it's also an internet problem. If you look at the cybercrime and cybersecurities bill, there's a whole section on there on how do we get kind of international cooperation to fight cybercrime. And I love the idea of AI in regulation.
Thank you so much. Dawid.
I think, you know, from a concluding remarks perspective, I think from my side, I think we should accept that some form of regulation will come. It's just the trend is towards closer regulation, and I would encourage people who are active in this space to be part of the debate, to participate in the way in which regulations will develop, to have your voice be heard. There are lots of forums out there to participate in that debate, and I would really encourage you to do so.
Thank you.
I agree with Monica that it's probably a timing issue. But that being said, the regulators have to prepare themselves for the fact that blockchain is an eventuality. You looking at from the evolution from horse and cart to motor vehicle, completely different, and you have to be prepared that this is going to actually to be the future. So you've got to prepare for it.
Man, this is super exciting, by the way. A lot of great comments. A couple said the lottery, I mean, we'll talk about over beers. I completely disagree. But on the, oh, no, we'll talk about it after. On the global one, that's a super interesting question, right? People ask us, yes, and Lagarde made the comments in Davos, you know, we should have global regulations. In practice, again, I mean, think about it. Global warming, we're not able to agree globally.
Sure.
Child labor, we're not able to agree globally. So before we're able to agree globally on how crypto regulation should work, man, and actually what you see for a good example analogy is in the tax world, you know, for the decades, there's FATF been trying to combat jurisdictions that are doing money laundering or actually are very open to certain type of individuals. And even there, we're not able to get there. So there's always a country will try to do some arbitrage. You know, so that's unfortunately, I wish, but actually the fact that each country is separate sometimes is an advantage. That's why you see regulators often work together because they're not competing. Two banks that try to consortium, there's kind of competition. You know, or like in the fintech space, one wants to have it before the other. Regulators, actually, their remit is actually very defined. So that's why I think you have good collaboration from that perspective. And you're absolutely right. Regulators, and really I cannot emphasize, they're way more knowledgeable than people think. The one thing I would say, actually, more than regulations, I actually expect the tax authorities to wake up way before. The tax authorities, again, around the world, in jurisdictions where this is taxable, Even in the crypto to crypto space, you saw some of the tax changes happening where it's not a same asset is taxable. You saw what happened with one of the big US exchanges with the federal court judgment. I actually expect the tax authorities to wake up pretty quickly as well, and all these things will move on. But unfortunately, it's a super exciting space. When it comes to blockchain and AI, I mean, I can tell you as a lawyer, I'm very passionate about this because I'm sure many of you in the room, at one point you needed to go see a lawyer, and you didn't. Why? It's probably too expensive, right? It's unacceptable. Something that rules that human beings are drafted is too expensive for the average person. And actually, that's one area where we're using a lot of AI. We're using a lot of blockchain. I mean, I'm working on projects where it's chatbots for legal services. On blockchain, I mean, there's so many use cases we're working on right now think of something as stupid as you buy and sell a house. The fact that you have many countries, you have to go to Notary Public or a lawyer to have to do a transaction, it's stupid. You know what the biggest obstacle is for the law tech space and the AI? Law societies. There's many examples around the world of great law tech solutions that would make legal services more accessible. And the organizations often that block it are the law societies because it impacts lawyers' jobs. And again, they're looking for the best interest. So I think there's a lot of stuff. Unfortunately, it's tough to get a consensus on it, but it is what it is, guys. I mean, I still believe we need more regulations and we need to play ball with the regulatory regime, whether we want it or not in the short to medium term, if we want the ecosystem to be more going the mainstream. Because if it stays in the fringes, it's not going to benefit for all of us. I think we're all in the benefit that actually goes more in the mainstream. So, thank you very much, guys.
I think, just in conclusion, I think what we've heard from all your comments and the comments from the panel is that regulatory frameworks in some form are required for this space at the moment. But I think what we've also heard is that regulations themselves can either be destructive or can release tremendous value for society. And I think what's very encouraging, and I think we should feel very lucky in South Africa, I think one of the regulators, particularly right now, actually 8 of them, 8 members from that regulator are in the room today, or have been in the room today. So it's very encouraging in South Africa that we have regulators that are on the ball, and we look forward to great regulation in this country. So thank you very much for a wonderful panel.